All right, let's talk about turning your investment portfolio into something a little more useful. I'm talking about a reliable source of income. Today, we're going to break down exactly how you can structure your investments to create a dividend paycheck that shows up like clockwork every single month. Let's dive in.
So, let me ask you a question, and be honest. Does this sound familiar? Your mortgage or your rent, your car payment, your utility bills, they all show up once a month, right on schedule. But the income from your investments? Well, that's usually a completely different story, isn't it?
And this right here, this shows that disconnect perfectly. You've got this constant stream of money going out for bills, but your dividend income, it tends to arrive in these big, inconsistent lumps. You might get a great payment in March, but then crickets in April and May. That kind of cash flow mismatch can be a real pain.
This whole timing issue actually has a name. We're going to call it the payout problem. And that's really the core challenge we need to solve if we want to build that steady, predictable income stream.
So why is this problem so incredibly common? Well, it's actually pretty simple. The vast majority of companies in the US that pay dividends do it on a quarterly basis. That means once every 3 months. So even if you own a bunch of fantastic stocks, there's a really good chance they're all paying you on a similar, lumpy schedule.
I love this quote from Kiplinger because it just nails it. The bills are, as they say, relentless. But the dividend payments can feel almost random. So, the big question is, how do we fix this? How do we smooth everything out?
Okay, enough about the problem. Let's get to the fun part. The solution. The whole goal here is to build your very own personalized monthly dividend paycheck engineered straight from your portfolio. The secret is to stop being passive about it and start being intentional. Instead of just buying great companies, we're going to buy great companies that pay their dividends in different months. We're essentially creating our own custom payment schedule.
And here's a really cool way to think about it. The strategy is to create 3 different buckets of stocks. Your first bucket is for companies that pay in January, April, July, and October. The second bucket is for February, May, August, and November. And you guessed it, the third is for March, June, September, and December.
And here's what that strategy looks like in action. You combine a stock like JP Morgan from Group 1 with Valero from Group 2 and Johnson & Johnson from Group 3. And just like that, you've built a system that pays you a dividend every single month. It's such a simple idea, but it's incredibly powerful. Now, staggering quarterly stocks is a fantastic way to create that monthly income. The big plus is you can get really broad diversification. The downside? Yeah, it takes a little more work to manage. But what if there's another path? What if you could find individual companies that already pay their investors every month? This brings up a really important question, though. How do you make sure those payments are actually, good quality?
Right, because no matter which strategy you pick, it's not enough to just get paid every month. We want that paycheck to be reliable. We want it to be dependable. And ideally, we want it to grow over time. So, we need a filter, a way to find those high-quality, trustworthy companies.
And one of the best quality filters out there has this great name, Dividend Aristocrat. Now, this isn't just a catchy phrase, it's a formal index. To get on this exclusive list, a company has to be in the S&P 500 and, get this, it must have increased its dividend every single year for at least 25 years in a row. Talk about a sign of a healthy business.
And just so you know this is legit, the term comes directly from S&P Dow Jones Indices. One of the biggest names in the financial markets. So this isn't just an opinion, it's a serious, respected benchmark for dividend consistency and growth.
Think about it, you just can't fake a track record like that. A 25-plus year history of giving your shareholders a raise every year? That screams financial discipline. It points to a business model that is tough, robust, and can make it through all kinds of economic storms.
So, let's put these 2 big ideas together. What happens when you find a company that has both a monthly payout schedule and that elite dividend aristocrat status? Let's look at a real-world example.
Meet Realty Income. Their literal trademark is the monthly dividend company, so they're not shy about it. They're a real estate investment trust, or a REIT, which just means they own a ton of commercial properties and collect rent. And as you can see, they check all our boxes. They pay out monthly, and yep, they are a confirmed S&P 500 dividend aristocrat.
And just to give you a sense of their scale, we're talking about more than 15,500 commercial properties all across North America and Europe. This is a massive, diversified portfolio of real estate.
Okay, that's their size. But what about consistency? Check this out.
667. That is the number of consecutive monthly dividends they have paid out. They have never, ever missed a single month. That is just incredible reliability.
And it's not just about being consistent, it's about growth. That's how many times they've increased that dividend since they went public back in 1994. So there is a very long history of them not just paying, but raising that payment over time.
This quote from the company really says it all. Their entire business is built around this one single idea, giving their investors a durable, reliable, and growing monthly dividend. It's not just something they do, it's their whole mission.
So let's wrap this all up. What are the key things you should take away from all this? What does it really mean for you as an investor?
Okay, so we started with that classic problem, right? The frustrating mismatch between your monthly bills and your quarterly dividends. From there, we looked at two really solid solutions. First, that three-bucket system, where you stagger different quarterly stocks to make sure you get paid every month. And second, finding those high-quality monthly payers, like our Dividend Aristocrat example, Realty Income, that do all the heavy lifting for you. Both of these paths lead to the exact same powerful goal, turning your portfolio into a predictable income machine that you can actually count on.
When you start applying these strategies, you can begin to see your portfolio as something more than just a number on a screen. It becomes a functional cash flow machine. So, I'll just leave you with this one final thought to chew on. What if your portfolio could pay your bills?